Welcome to Beyond the Block, a Web3 focused podcast where in each episode we'll explore a topic impacting our industry. Joined by an esteemed industry colleague, we'll dive deep into how it's driving our businesses. This is, of course, all powered by Kadena, the only truly scalable Layer 1 proof-of-work blockchain. Let's dive in.
Awesome. Well, GM, great to see you guys again. Paul, always a pleasure. Dillon, pleasure to see you again. We are going to be having a lot of fun today talking about one of the hottest topics in Web3, being oracles. I am blessed to be surrounded by such smart, incredible, innovative people, and we're going to dive deep into Dear Data. We're going to have some fun. We're going to see what's happening in the industry. We're going to get a great feel and a good rundown for what Dear Data has been working on, why we're excited by this partnership between Kadena and Dear Data. And yeah, let's jump into it. So before further ado, Paul, how about giving us a bit of a rundown of who you are, where you fit into the picture with Dear Data, and even maybe a few tidbits about your background, what got you into Web3, etc.
Yeah, sure. Love to. Thanks, Ryan. Excited to be here today with my colleague, Dillon. So just some background for the folks listening in here. My name is Paul. I'm one of the co-founders at Dear. I run with Dillon the BD sides of things at Dear, and it is now around 6 years ago that I co-founded Dear with my colleagues. We had in 2018 the belief that Oracle architecture might not best cater to the emerging use cases we see actually increasingly being of relevance today. Before that, I was in e-commerce for quite some time, building companies there. I have a background in management and finance, and over time just got into the Web3 crypto rabbit hole. And by 2018, I thought I'll take this into hands and build something I believe was missing.
Awesome. I've got one question for you because I love asking this question. At what point in time did you decide this Web3 thing, this whole world of blockchain is legit, it is real, we're actually going to be building something? When did that, I would say, penny drop for you?
I think there was not the day where I realized, okay, this is something I can't watch from the sidelines anymore. So it was 2012 that first time I bought Bitcoin at a CEX. And then I didn't know really what I was doing. And it took quite some time to understand the basic underlying concepts. But I'd say it was, 3 years-ish prior to actually founding Dear that my interest shifted more and more into the technological aspects and understanding more and more of the architecture back in the days. So really a gradual process, and at some time when you realize that you're spending majority of your time on something which is not your work, then I think it's time then to transition. And that was right before 2018 the time.
That's awesome. You actually nailed something which I think is so important. It is that turning point when you realize that something that you're sort of interested in, you're investigating, you're learning about, actually becomes almost an obsession. It becomes something that you strongly believe in. You see the vision, you see the strategy. You can almost see, I'm not going to say the crystal ball, you can't see the future. That's really not possible. But you can see that this has legs. And it's kind of like that light bulb moment. I love that. That's fantastic.
Absolutely. Maybe just to add on this, I really back then, and I still believe today, that this is a fundamentally technology which has fundamental impacts beyond just DeFi and certain elements we're all very much focusing today. And I felt I need to be building a technology which has such fundamental impact and be part of this. So it wasn't okay, I'm interested in this category maybe or in this specific topic, there was rather really this urge to be part of this next fundamental technological shift.
I love that. Yeah, I've often spoken about this, that it is not often that you get the opportunity to be a part from the very early stages, the founding stages of such an instrumental and industry-changing technological event. So yeah, I'm with you. I would high five you, but we're too far away. Awesome. Thanks, Paul. Dillon, why don't you give us a rundown? Your background, what got you into Web3, anything you want to share.
Sure. Yeah. Thank you, everybody, for having us. And to start, I've been with the DIA team for about 2 years now, helping, as Paul mentioned, run BD here. Before that, I was on a team called Robonomics, which was still building an IoT infrastructure in the Polkadot and Kusama ecosystem. So basically a blockchain for storing telemetry data. Before that, I was in the TradFi space for about 8 months after college. And so I'm working backwards here, but it only took me 8 months, like Paul said, to realize that my passion for blockchain and crypto was significantly outpacing my passion for TradFi. And like you said, Ryan, this was an opportunity for me at a young age to partake in a space that was evolving fast in real time and something that I can actually have an impact on, rather than the opportunity for growth I saw in my career in the TradFi space, which, seemed like it would be a lot more, take a lot more time to really make an impact on the way things operate. And so definitely saw this as an opportunity. When I actually first saw and got interested in Web3 and crypto when I was a student in college, it was like late 2017, probably, at that time, peak of the bull market, early 2018, one of the worst moments to get in, of course. But I think that's oftentimes when people have their introduction to this space, is when things get really heated up there. Before that, I was always passionate about investing in equities, as I mentioned, TradFi. And so it was, something completely new to me to refresh the page every 10 minutes and see Bitcoin moving $100 per hour or whatnot, the volatility in the price action. And again, learned that shortly after that this was actually backed by fundamentally innovative technology and something that, at a young age I could grab onto and make an impact on. So, after Robonomics, I realized that what I had already built a basis in was data. In that actually, when you look at blockchain, really what's happening and all that we're doing is really data related. It's all based on data. And what really drove me to have an interest in joining the DIA team was actually the cross-chain focus in being live. And now we're present on 47 different chains, and we'll get into that. But it was really I found one of the, limitations in my early intro to the space was that I was kind of pigeonholed and only focusing on one ecosystem specifically, which allowed me to grow, but also caused, some limitations in my growth. And so at DIA, I was really passionate about joining the team and being able to focus on all of these exciting chains and everything that's happening, all of the exciting sectors that are being built at once. And so thought that was a pretty interesting opportunity.
I love that. And for anyone listening, I hope they caught it. You dropped probably 27 different nuggets that we're going to have to dive into at some point. And we'll dive into all these bits and pieces, because one of the most important ones that you hit on, which is something that I'm very passionate about, it's a lot of my background and my history, is data. And data essentially is the most valuable asset, I believe, that we hold and can control. But let's take a little bit of a step backwards. So for those people that are not in Web3, or those people that are not even active in any form of tech or whatever else, if you ask them what an oracle is, they're probably going to say some person that is a source of truth that holds some very valuable data, that is a verifiable, very smart person or leader as such. And I think it actually translates quite well to what an oracle in Web3 space actually is, which is the ability to bring this off-chain data on-chain, and most importantly, in a timely, verifiable manner. And so when looking into what DEA does, and obviously we have a wonderful partnership evolving with you guys, critical component to any blockchain and to any ecosystem. When we talk about oracles, there are some fundamental components behind it. One, they have to provide end-to-end solutions. Very important, I believe, to be open source, transparent, customizable, which is something that I would love to dive into with you guys. And also, if you have the ability to, which I feel, and we as Kadena actually feel is very important to us because it is fundamental to our ecosystem and to our actual blockchain, and that is keeping it all decentralized. To me, once you bring all those pieces together, you have the ability to provide an incredible service for anybody, whether they're devs, dApps, teams, products, projects, Web 2, Web 3, Web 2.5, throw in any number, it doesn't really matter. Whoever's building in this space does need to be able to leverage a verifiable, reliable service where they can get access to credible data in a timely manner. So that's how I feel or describe oracles. That's how I understand and have leveraged and worked with oracles in the past and today. Anything you guys want to add to that, or how DEA actually sees oracles?
Yeah, I'm happy to kick this off and then hand it over to Paul there. So I think you described it really well, Ryan, in that the first use case of an oracle is delivering external or real world information on chain. And why is this the case? Well, when you look at blockchains or you look at decentralized applications that exist and are deployed on top of blockchains, these are inherently limited in their ability to access this external information. And so when we get into the real utility, right? If you're creating an application that has real utility, something that has to do with data that exists in the real world, or oftentimes in now DEA, we focus a ton on-chain data. So while I said the first use case was real world off-chain data, we're also super focused on on-chain data, as we see now that the pricing of assets and other forms of data, right? Actually being able to generate random numbers, being able to provide NFT floor price data. We see as this industry evolves, there's all this new type of data that's actually being demanded for these applications. And so what an oracle does is, simply put, it's to put it in, I guess, simple terms, it's the device, it's the software application basically that's delivering this data to these applications to function. And so to give it one quick example and then hand it over to Paul, let's look at DeFi and just put this into really put this into terms here. Let's say, in DeFi, what can you do? Well, you can lend and borrow, you can trade, you have stable coins with collateral. Let's say, Ryan, that I lend you my Ethereum, right? And you want to be a borrower for my Ethereum. Well, that's great. And there's applications that can create that transaction and enable that. But those applications need DEA, or they need oracles, to actually tell you what the price of that Ethereum is at the point at which our transaction is occurring. And so all of these applications that you see in DeFi and even outside of DeFi that are, let's say, trading, I enter on a perp protocol, I enter or exit a position with leverage. Well, you need the price of the asset that you're trading in real time in order to perform those transactions. And so that's kind of a high level look at the role that the oracle provides in different contexts. Maybe Paul, if there's anything or yeah.
Well, before Paul, actually, if I may ask a question, and maybe Paul wants to answer this, please. So one of the things you touched on is being able to actually pull that data. And in this example, it's the price feed. Something that I love about what DEA does is you don't pull data from a single source or a single type of source. Would love you guys to dive a little deeper into that, how you actually aggregate and verify these data sources.
Yeah, love to, and that's exactly what I wanted to add, because you were specifically mentioning like the open source and the decentralization aspect when it comes to Oracle and their trustworthiness. I think this was really something which was like the starting point when we designed DEA. We felt there that oracles can be designed in a better way. We were missing the transparency, which is, I guess, not only ethos, but part of the technological foundation of Web3. And with the solutions out there, by using, as you were already saying, like third-party data, we felt we're missing transparency here. And this is not like only transparency as a goal for everyone to understand what's the underlying data and a nice to have. But the more and more we're connecting different ecosystems which are interoperating with each other, but are not perfectly connected, right? So there's like some highways, again, coming back to the point Dillon mentioned of everything is around data, obviously, in this space. But data is not perfectly accessible on every blockchain. Oracles do provide, and other messaging protocols do provide the rails to make this data accessible. So for us, taking first-party data directly from the markets where trades actually occur and adding metadata around that, because not only a price matters, everything around that, the volume on these markets, the liquidity depth, they all add and provide additional really relevant information to for applications to take a decision and execute. So we do differ here with our architecture to most of our peers by being able to really source data from various different DEXs and CEXs and then apply whatever methodology fits the use case, including excluding those markets and then providing a price point. So yeah, that was I think back then the starting point of rethinking Oracle architecture, and this becomes, I think, more and more relevant with like a multitude of different ecosystems working alongside each other.
Yeah, and it's really critical when you think about what these use cases are going to be moving forward. I mean, if you've heard recently, I think it was in the last month or two, which was even replayed this morning, was Larry Fink from BlackRock's perspective on RWAs, which is something I really do want to dive into with you guys at some point. But in order to provide validity, in order to actually make this a credible offering, in order for these platforms to facilitate offerings that relate to RWAs, you need to have verifiable, trustworthy oracles and the like. And so it's really fantastic that the platform that you've built, the oracle that you've built, is not just a one-size-fits-all. It's not just a single source platform. It really sounds like, at least to what I've understood and what you're explaining and what I've seen out there, it is a really well-rounded offering that can scale. So great explanation of the oracles and the price feeds and whatnot. Let's dive into actually something that Dillon and I were talking about yesterday. What about LSTs? This was something that I think you're kind of excited about, something that is a hot topic too, outside of just traditional oracles, but certainly LSTs. Do either of you want to talk about that?
Yeah, I'm happy to start this here since we had a chat about this yesterday, Ryan. Yeah, and I'll start by saying, like, really, again, one of the exciting things about working at DIA and working generally for an infrastructure provider is that you are seemingly pretty well positioned to capture a lot of these exciting categories in this fast evolving space. And so, whereas let's say maybe 12 months ago it was, or even 16 months ago, it was NFTs that were the illiquid hot assets at the time. Now, it quickly became LSTs. And now we're also looking at RWAs. And so it's pretty great to look at how we can be strategically positioned to support all of these different narratives from an infrastructure perspective. But I really do like what we've done with LSTs. So happy to dive into that a bit because, again, it requires some flexibility, right? Something you were mentioning, Ryan, is important to cater to new needs in an evolving space. And what we've been able to do is, maybe I should take a step back and say, arguably the most important component of providing robust price feeds, secure price feeds, is the liquidity, the confidence in the underlying sources, and the volume that's being used to generate a price feed. And so one of the issues that we ran into, or rather, I guess, limitations with LSTs, is that while you have, the Lidos and the rocket pools, the majority of them are seemingly more long tail, in that the LST tokens themselves are less liquid, or are only trading on DEXs rather than being supported on centralized exchanges across the industry. So at DIA, we were well positioned to support this because, again, as Paul mentioned, sourcing from DEX trades is, uniquely our data sourcing approach, DEXs and CEXs. But on the DEX side, where it enables us to capture these unique assets. And while we are capturing trades for LSTs, we noticed quickly that a lot of these are illiquid. So we've been able to kind of implement a new approach where we can basically read the on-chain collateral value of the receipt token, which receipt meaning like the I guess the yield-bearing token, right? If you have ETH and you deposit ETH, you get, let's say, staked ETH. When I say receipt, I'm referring to the staked ETH part here. And we can take a market price for that, look at staked ETH, what is that trading on the DEXs? But we can also look at the contract state of the liquid staking protocol itself and get a better understanding of, okay, to what extent is this staked ETH actually collateralized by ETH on the contract level, and provide fair value feeds based on basically the collateral health of that. Not to go on too long into one little, one segment here, but maybe because you mentioned RWAs, we have a similar approach here as to pricing, illiquid assets on chain and looking at collateral states. But again, just wanted to kind of highlight how customizability in being able to navigate with flexibility was really important for supporting a new kind of asset class here.
No, that's fantastic. And actually, that's a great segue into your customizable oracles as such, where devs or teams or whatever else can actually build out customized oracles for the data that they may require. I find that fascinating. I find that to be a highly valuable offering that DIA actually provides. Do one of you want to dive a little deeper into that and the thoughts behind it?
Yeah, I think this connects really well to what Dillon was just sharing. I think we're trying to increase the sophistication and the options users actually have when it comes to price feeds. So you shouldn't be bound by just having a market price from somewhere, but there should be very different logic by assessing a value which best fits your need. If you're very long tail, liquidity might be an issue, or volume. There are very different reasons, and while we're moving away from just like standard set of copycats being deployed on various chains, we see increasing sophistication and bespoke architecture being built. And we're just providing here the underlying infrastructural components to enable all these use cases. And one key element, we believe, is providing price feeds which cater exactly to the informational need an application might have. And this can be a market price where you select the markets on certain chains with liquidity thresholds, and where you can define the methodology of how you, for example, volume weight an average for a certain time window, a price feed, where you add additional logic around that. The prices are only updated when certain other criteria are being met. And this level of sophistication is fun to provide because it by default connects us with the teams who try to push the boundaries. And here we're trying to constantly increase the stack of things we can enable, and it's a back and forth with these teams, understanding what they actually want to achieve and questioning, can we serve them in any better way than we're already constantly doing. And this is kind of like triggering our innovation cycle and led to the products we're offering today.
I was I was actually going to ask that, and that is whether any teams out there that have either built their customized oracles or had requirements where they've worked back and forth with you, have any of those kinds of customizable oracles or the feature sets behind it actually made it into the core product? Because that's a great way to do some level of, I guess, R&D, market research, validation, and then go, well, that team just built something that is absolutely fantastic. Why not offer that out to everybody else?
Absolutely. That's I guess, our product development. It's core of our product development cycle to speak with the teams we work closely with, telling them what we have in mind, understanding how it fits the product, and vice versa. We're the first, I guess, to call when they want to change something within their architecture and questioning if we can support that.
Excellent. That's fantastic to hear, because it also shows a belief, support, integration, and fantastic partnership with your ecosystem and the devs and builders outside. Okay, how about we dive a little bit into RWAs? Love the topic, hot and heavy. I mean, if you talk to anybody today, right now in Web3, the two biggest hot topics I think that people are talking about are DePIN and RWAs. It's just wherever you go. If you were out at ETH Denver earlier last month, back end of last month, earlier this month, it was some of the fundamental talk tracks, fundamental side events. There were special days associated with both DePIN and RWAs. And of course, oracles are at the core of making these actually functional and capable. So who wants to kick off the RWA stuff? And when we talk about RWAs, I realized that we actually said LSTs without explaining that's liquid stake token. And then from RWAs, it's real world assets. For those listening that may think that we're making up words because this is Web3, we make up acronyms. Yeah, who wants to lead that one?
Yeah, I mean, happy to. Let me just give maybe my bird's eye perspective why I'm super excited, and then I'll hand over to Dillon. So I think RWAs have been out there, at least like the idea, also for quite some time, but has just happened recently. I think that this category is getting the deserved traction, and personally, I think reason for this is that the utility has increased of an RWA. So I personally think there's like limited value of just replicating something which is completely off-chain and just have one representation of that on-chain. So I honestly always like question, okay, what's the benefit here, right? We're building Web3 to disintermediate structures and making things simpler and ensuring that things settle and so on. Why do we add, like, we're not in the business of adding complexity, right? And I think it's relatively recent that we see how value represented on-chain can then be actually leveraged within DeFi to create additional yield. And this is super exciting. And this is the area where we are providing also, again, the tooling to be able to assess value, which is settled and held in a trustworthy place off-chain, and represent that on-chain. Yeah, here we have different toolings for that. But handing over to Dillon on this.
Yeah, not too much to add here, except maybe echoing Ryan in the Larry Fink quote that excites me most, and that Larry Fink has taken a leadership role in suggesting that every asset will be tokenized on chain in the coming 10 years. And what I like about this is you look at Larry Fink and a firm like BlackRock, and they're not making 1 to 2 year decisions, right? He's looking long term, 5, 10, 15 years out. And so for me, that's what's most exciting, in that I see, I'm a pretty crypto native guy myself. So the opportunity I see with RWAs, or real world assets, is really kind of furthering like the intersection between traditional finance and what gets traditional financial, advisors and investors kind of onboarded into Web3. And then, as Paul said, the exciting part starts to, come when you can earn additional yield or, perform additional basically get additional value or utility out of these assets once they're brought on chain. And then, us crypto guys, we get to show everybody else what we've been so excited about for so many years in terms of the additional utility and yield on chain.
Yeah, it's not just smoke and mirrors, right? We've actually been building. Yes, there was this terrible hibernating bear market, but people were heads down actually building for the future. And we've just seen one of the biggest leaders in TradFi validate what has been built and why it's being built. And I think this is just the beginning of that, actually. And I guess for people listening in, or maybe even watching and listening in, when you talk about RWAs, it's not just financial instruments. It's not just debt instruments. It could be anything from a valuable asset or any kind of asset per se that could be stored and or tokenized on the blockchain. So we're talking about property, we're talking about watch collections, you're talking about your playing card collections, artwork, your sneaker collection, whatever it is that can be tokenized, referenced, and even beyond that now, which we couldn't do prior, which is seamless fractionalized ownership of any of these kind of assets, which is super exciting. I mean, I don't know who wouldn't be pumped about that, where you have the ability to both prove the ownership of the asset, verify the credibility of your asset, the value of your asset, and store it on chain. And hey, you can even show it in your wallet if you want to. Great stuff. So oracles as a fundamental component, infrastructure component of Web3. There are a few players out there. I don't know if you want to dive into a little bit as to how you differentiate yourself among some of the players. I'm happy to, I'll bite the bullet. I'll mention some of the names. So we're probably talking about Chainlink. We're talking about Teller. We're probably talking about Pith, which was the big launch that took place back end of last year. Where do you guys see yourself fitting in? It doesn't matter about competitive nature. I believe that Web3 is more of a co-opetition type environment where there's collaboration with your competition. There's ways where you cross over. There's feature sets that you provide that others don't. There's feature sets that overlap. But where do you guys see DIA in this whole ecosystem?
Happy to take a quick stab at explaining sort of how we differ on the architecture side and then on the product side, and then toss it over to Paul to elaborate any further. But just to kind of get back to how we are differentiating ourselves, it really does originate on the architecture side, and I will try not to get too into depth here and carry on too long as I get excited. But again, it gets back to how we source data, as Paul referenced, from first-party sources as opposed to third-party sources, where we see the majority of competition, if not all, is getting their data from off-chain, or rather sourcing data originally from off-chain third-party data providers. In this process, these data providers are submitting price feeds or data to the given oracle's nodes, which reach consensus and deliver the information on chain. In a very quick, high level summary, that's what's happening. And we see over time that this has proven to be robust and can be well decentralized in the right contexts and architectures. But the one caveat within that we were actually founded out of a solution towards at DIA is the lack of transparency within that that's created within that architecture. And what I mean by that is that by the time those feeds are delivered on chain to the developers and the end users, they have actually limited understanding and limited transparency where data is originating on the source level, meaning there's no direct understanding that data is specifically coming from, let's say, Binance and Kraken, Uniswap, SushiSwap on an exchange level. And so the first things first, the way that DIA solves for that is, as I mentioned, getting our data or sourcing data directly from these first-party sources. So a few things, that's the architectural difference. And on the product side, just to summarize, what this really enables us to do is provide these fully end-to-end transparent oracles that are highly customizable, because the flow of the data, the data points at which we're ingesting and using are very granular. We're using trade data on the individual tick level. So it allows great flexibility with the product itself. And then the last thing, again, I'll summarize here, but this is really what excites me most about DIA is our ability to get our trade data directly from these DEXs, which enables us to support the largest breadth of assets of any oracle. And maybe that's making a bold claim there. But arguably among, and definitely among the top breadth of assets in terms of oracles, because as many know, when a team goes and launches a token, first things first, they usually seed liquidity on the top DEX on the chain that they're on. It's very common that you do DEX listings before centralized exchanges. And so at DIA, we are the oracle that really caters to these ecosystem feeds, these ecosystem native assets that pretty soon, once they launch and meet our liquidity and source criteria to create a production ready feed, we're able to support these. And that's why many teams come to us and saying, hey, we only have liquidity on these DEXs. Can you support, we're struggling to find an oracle. And I think this is really the great value add. One of the greatest value adds that we have is supporting assets pretty early in their stage. And oftentimes when they're still only limited to, a few sources within a given chain.
I love that. And I'll give you guys kudos, because that is very clear to see and understand, or should I say even comprehend, just by reading that off your website. So I'll give whoever's created that kudos to them, because when I've gone through your website and whatever else, if I need to refresh my memory or see if there are any new nuggets or whatever else, it's very clear the story that you tell, and it's very clear as to where your value prop is, this multi-source sourcing of data feeds and verifying them across those sources. So great job in doing so. Not always an easy.
Appreciate it.
Yeah.
We'll pass that along.
Yeah.
So maybe just to add on what Dillon said, and I think, and that's not, I guess, the standard response here in the broader Oracle space. I'm actually quite happy that we have all these different peers around us. And the ones you mentioned, their architecture does differ. So it's not just like a copy paste of ours. So we have different architectures, and all of those have certain benefits and weaknesses. Although obviously I have a very strong opinion which architecture is superior among the mentioned ones. But I think it's great that in Web3 developers and users ideally have the choice to optimize for whatever they find most beneficial. For us, it is really the transparency and the open source aspect of that data. So yeah, I'm super happy we're working among these peers, and this ensures that we're all trying to push the space further and building the best possible product out there.
Yeah, it's a great way to validate that you're building a product that is viable and has product market fit. So absolutely, I'm all for competition. I think it's important, whether it's direct competition or just side by side competition as such. One other thing I would love to hear a little bit more about is cross chain. Can you elaborate a bit more on what you're doing with regards to cross chain as such?
So again, this was really a driving element when founding DIA, the belief that we won't end up just with one ecosystem, which is determining the entire space, and everything else around that is irrelevant and segregated. So I think we see an increasing fragmentation of ecosystems and layers, and L1s, L2s, L3s, and then we see all different ecosystems based on different languages, consensuses, and so on. And they are all semi-perfectly connected. lots of smart teams are working on increasing this connectiveness across these ecosystems, while innovation again is basically driving the increasing level of fragmentation at the same time. So it's kind of like this catch up game. I think we'll continue to see, and exactly this fragmentation is where we excel at. Being very specific and understanding where actually liquidity sits and where trades occur, and then providing the ability to define prices in a way that is meaningful to your application, because you can tap into liquidity maybe within your ecosystem, maybe it goes beyond that. So and we see this like on the L2 level as well, that like liquidity is being bridged and be made accessible. So here again, then we can look like at a much broader part of the ecosystem. We can include messaging protocols connected to it or not. So cross-chain is really where we feel at home, and providing this additional value in being able to differentiate where actually trades occur and how and where data originates from.
Oh, fantastic. I have another question. I probably have a billion questions, but we won't go on for forever. Where do you see, and this is just an opinion question, where do you see us going next? I mean, deep in RWA is hot and heavy, LSTs hot and heavy as well, actually. Where do you see us going? I mean, what's next, or what are you feeling is a bubbling narrative?
So I love this question. Obviously, I feel like we probably all love this question, and
yeah,
it's exciting
non-speculative. This is not an investment thing. This is NFA, DYR, etc. This is more of a what's going on in your head. Like, where do you think we're going?
And what I love about this is that Paul and I have both things that we're collectively excited about and also uniquely excited about.
Oh, excellent.
And so happy to share what I'm interested in right now, where some of my weekend time is going towards, and then hand it over.
Yeah.
So I actually more recently have been pretty excited about the increasing utility of the Bitcoin ecosystem. I'm of the belief that we're in a pretty Bitcoin-driven market cycle right now with regulatory clarity. We have the ETF, and we have a lot of institutional demand being, funneled into Bitcoin. And so now we're seeing that there are additional layers, scaling layers, layer 2 chains being built on top of Bitcoin that are actually enabling, for the first time, really decentralized applications to be built that ultimately settle back on the Bitcoin layer. And so I've been interested in those. I think that they pose a pretty great opportunity for us at DIA. As you know, again, we get into this granular look at pricing within ecosystems, and we can actually even, along the narrative of Bitcoin, like BRC20 assets, right? Assets that are being actually, I guess, deployed on Bitcoin are actually an area of assets that we can cover, because some of these assets are trading on centralized exchanges. And as they grow and are more traded on like common decentralized exchanges, we can actually theoretically implement support for those as well. So I'm really interested in this. I think it's a very fast-paced, moving sort of segment of the industry right now. So Bitcoin, building on Bitcoin is really interesting for me. And also, just aside from even the with connection to DIA, but also outside of DIA, really interested in how AI is growing and the advent and the use of AI agents on chain, how that'll continue, actually very much like change the way the space is navigated. One of the things Paul just said that I really completely agree with is that we've seen increased fragmentation, kind of alongside the increased innovation. And I think that these AI agents might pose a partial solution to this, as you can, tell them you can broadcast one transaction, right? Click confirm, and these agents can actually go hop in between all these fragmented chains and in between fragmented sources of liquidity on DEXs and protocols. And so interested in how AI will actually combat fragmentation with like seamless cross-chain interactions.
They're like the modern day version of the old telephone switchboard people that would pull a plug out of this one and put into that one and this one and into that one, and because they know exactly what they got to connect and where to connect it and whatever else. So you grab an AI agent and it's basically doing that for you with a lot of intelligence behind where to find liquidity in this case.
Absolutely.
What about you, Paul? What's exciting for you? Where do you see us going?
Yeah, I mean, again, mentioning RWAs, and I'm particularly excited here on our collaboration with Kadena, because I think you are providing the exactly right and needed infrastructure to push up RWAs further. So I think it's not really a question of will all financial instruments at some point run like on a decentralized stack, but just when. So I think in May, the US is moving from 2-day settlement to 1-day settlement. So while we have a few seconds or millisecond settlement times on chain, so I think this is a given, and bringing then assets as the driver here and providing utility for those assets. So either providing utility for something which is already there, like treasuries. How can you I don't know, use this as collateral for a stable coin, or fragmentation of like illiquid assets, which is the much harder, but also a super exciting, huge market opportunity, completely untapped. So I think we'll see this in evolving over time. So RWAs, I think, will maintain for quite some time one of the core drivers in that ecosystem. And so, yeah, we're very excited to be able to work with you on this and trying to help out on the Oracle side where we can to make the builders on Kadena equipped with the right things to get the use case live.
Yeah, I love that, Paul. What you just said, or at least what you were sharing, really translates exceptionally well to our narrative, which is building out the human layer, layer H, as we love to call it. If you've checked out the new launch of our website earlier this year, we're very focused on what we call the human layer, which is giving humans the ability to build what they want, how they want, where they want, pretty much without these boundaries, without these restrictions. So really giving back the internet to the people, giving back the data to the people, giving back the ability to build what they want, and for the good of humankind. And I feel like oracles in particular are one of the fundamental components, infrastructure and inter-network components that actually enable that capability. So, yeah.
Yeah, love that vision. I think this is something which carries well beyond like a short-term narrative you guys have. And again, really happy to bring our small party to the table and supporting. Yeah, maybe just adding maybe two other things. I think rollups are exciting because they are one way to enable what you were just saying. I think breaking down the barriers for people to build something. I think there are different ways of how to do this. It's like us trying to productize oracles even further, so everybody can just like pick up an oracle, or with ecosystems such as yours, having oracles as a common good, freely accessible for everyone to build. I think rollups are also one part to accelerate and broaden the people who are building something exciting within the Web3 space. So excited about this and how this will impact all other ecosystems back and forth. So I think this will be quite exciting. Yeah.
Excellent. Fascinating. I'm excited to see where you go. I'm excited to see how much you build. I'm just as excited, and I didn't know this beforehand, but now I'm really excited about this, and that is that you allow devs and projects to build their customized oracles, and if they really add substantial value, or this is something that you believe would add greater value for anybody using DIA, that becomes part of, or at least promoted as part of the DIA product set. And I think that is an incredible way to both crowdsource your product development, prove viability of product market fit, etc. It's a wonderful way to demonstrate an openness to the ecosystem and that open source ethos. So I guess we're pretty much at the top of our time here. I would love to hear any closing comments, remarks, anything that you want to leave the audience thinking about when they listen to this, when they maybe read the transcript, or when they think about DIA. What do you want them to think about when they think about DIA?
Closing thoughts from me. Firstly, just want to say thank you, Ryan, for hosting us, and to the Kadena team for having us. Really excited to, finally kick off the deployment here, and as Paul said, play our role in supporting the thriving ecosystem that's being built and happening at Kadena. So thank you.
Mutual excitement, I can tell you that.
And then I don't know. I'm curious to hear what Paul says on leaving off a note on DIA here. But again, somebody said this to me the other day, and it's rung true. Like DIA is the Oracle for builders, and it almost sounds like direct. Like, of course, an Oracle is for builders, but when you really get into like the customization that we talked about today on the call, and really how we're looking to position ourselves just for teams that are on the forefront of innovation. Like these are the teams that really excite us to be, contributing to DIA is working with teams like Kadena and dApps that are, dApps on top of chains that we're excited about that are pushing the forefront. So, I think it's interesting even to be a part of the community at DIA if you're listening and just want to be a part of the community, because a lot of the teams that we're working with are, reflecting where the space is right now and where the space is heading and are at the forefront of innovation. So our community is strong, and we're always open to having more people in the community join us. It's basically a family. So
I love that. The Oracle for the builders. I love that. and just to clarify, any listeners or people can go to deardata.org. I was just making sure I had it here. Deardata.org. They can get to any of your socials from there. They can get your Discord, to Twitter, etc., etc. Paul, closing comments, etc. from you. I almost said closing argument, but this was definitely not a closing comments.
Hope not. Yeah, Ryan, thanks so much. This was super fun, and thank you for everyone here listening in. So I think last comments here. We're super excited to build with teams such as Kadena because they are equipping their builders. So love what you said, also Dillon. We are definitely the Oracle for builders, and we're trying to break down the barriers with our partners such as Kadena. So if you're building on Kadena, you just need to check out the documentation, and you see there are oracles which are freely available. You can just build right away on it. And if the documentation is maybe missing a question you might be having, we're also trying to reduce the barriers and be extremely accessible. So as Ryan said, just check out on X. There's like basically link outs to our Discord, as well as Telegram, and somebody from the community or the core team will definitely support you in building something exciting on Kadena.
Love that. Thank you so much, Paul. Been amazing. Dillon, been amazing. Look forward to meeting you guys IRL at some event at some point, because we know that there are 3,900 more Web3 events this year. And excited to see the growth. We love the partnership. I'm excited to watch this partnership not just kick off, but evolve and grow together, and watch the Kadena ecosystem also contribute to the growth of DIA. So thank you very much. Appreciate it.
Thanks, Ryan.